good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwal, along with me, Shell D'Souza as well. Shell, a very good morning to you as well. But markets, slight bit of that green it opened in and then it's given up those gains almost near the day's lowest point as of now.
Absolutely, a very good morning to you, Vinny. And also key to note is we did hit an intraday record high as well. At the open itself, but from there on we've only drifted lower, very muted moves coming in for both the benchmark indices, with Nifty Bank actually falling a bit more than the benchmark indices, 0.5% downtick coming in for Nifty Bank. If you look at the way how the stocks are actually panning out at this point in time, I would like to mark most of the counters actually on the BSE index to see what they are doing. So I will request my producer to fire those graphs on the BSE index. So one of them is Torrent Power. Look at that particular counter. It did see a sharp up move at the start of the day, but from there on it's actually given up some of those gains. A BSE counter or the BSE stock tags would be a better indicator, because we are seeing some glitch come in for some of the stocks on the listed on the Nifty bourses, but on the BSE bourses the rates are perfectly all right. So if you look at Torrent Power, Triveni Turbine, these are some of the counters that have lost steam over the last 15 minutes or so. If you look at Apollo Tyres as well, Tata Communications also, some of them have given up some of those early morning gains. But talking about what the sectoral indices are doing at this point in time, Vinny, and what the picture is there. If you look at the sectoral indices, it is the metal index that's taking it a bit easy in trade today. You have pharma otherwise holding on to good gains. Let's take a look at what the broader markets are doing in particular. Take a look at small cap index, because looks like there is a downtick coming in on the small cap index once again. Remember, the last week you had the broader markets that ended in the negative territory while the benchmark indices posted positive gains. There you go. Small cap index is down about 1% as of now. Mid cap index holding on to a flat line with a negative bias. So that's the way how the markets are looking like at this point in time, Vinny.
Okay, that's how the market setup is looking like. But, let's put the focus and shift the focus on OMCs. And that's going to be our BNSN lens that we will be talking about today in terms of OMCs. Now, why? The government has actually announced an LPG price cut of 100 rupees over the weekend. And they said that this cost will be borne by the OMCs. How will this impact the OMCs in terms of their profitability? Let's go across to Somit, who's going to be explaining us what this actually means for OMCs.
Well, if you see, the LPG price cut of around 100 rupees per cylinder will be a direct hit on the profitability of the oil marketing companies, because if you see currently the under recoveries on LPG stands at around 150. Now post this cut of around 100 rupees, that will increase to around 250 rupees per cylinder. Now the earnings impact might not be visible in the fourth quarter of FY24, because in FY24 earlier, if you see, oil marketing companies had over recoveries, and that's the reason this impact won't be visible in this current financial year of FY24. Over recoveries means that earlier they were getting LPG at cheaper prices, but they were selling at a higher price. So there was some profit that was booked earlier, and hence the impact won't be visible in FY24. But if LPG prices sustain at current levels globally, then FY25 profitability could take a hit. However, on the positive side, if you see, LPG prices usually fall in summer. If that happens, then the impact would be limited on the oil marketing companies. And in past, what we have seen is that any losses on LPG have been made good by the government, given the fact that LPG is a controlled product. So though interim budget does not account for any subsidy for FY25, but the final budget could account for. So at this moment, it's not clear whether there will be an impact or not. But if there is no subsidy burden taken by the government in the final budget, then definitely there could be some impact on the oil marketing companies. On the other side, if you see, what Morgan Stanley is currently saying is, in the near term, conversations with investors point to skepticism about the diesel and gasoline, that is petrol fuel price cut going forward, given that elections are approaching. At current prices, if you see, India's crude oil prices, India's retail fuel prices are benchmarking crude at around $90 per barrel. So Morgan Stanley is expecting a price cut of around 2 to 3 rupees per litre. Again, on the positive side, what we understand is that oil minister indicated that there won't be any price cut anytime soon, given the fact that the freight charges have recently gone up and oil marketing companies are still making losses when it comes to diesel sales. So it needs to be seen whether there will be any fuel price cut or not, because that will impact the profitability of the oil marketing companies as well.
Thank you so much for that, Somit, for exactly telling us why the OMCs are in focus. But also, let's actually hear out what exactly the oil minister had to say about the OMCs, because given the fact that the Indian OMCs have faced losses for not passing on the international price hikes to the consumers, is what the oil minister had to say over the weekend. Let's hear out what else he had to say.
अंतर्राष्ट्रीय महिला दिवस पर उन्होंने एक और डिसीजन कन्वे किया कि एलपीजी सिलेंडर का दाम जो है वो 100 रुपये और कम किया जाएगा. When the international price went up, we allowed the price domestically only to go up by 70%. In other words, the rest of it was absorbed. इसका नतीजा क्या हुआ? इसका नतीजा ये हुआ कि जो हमारी कंपनीज हैं उन्होंने घाटा लिया. कितना घाटा? उनका रिपोर्टेड लॉस इज 28,000 करोड़ और हमें उस 28,000 करोड़ में से शायद 22,000 करोड़ we had to reimburse them because we want to keep our companies afloat. And the companies ultimately are answerable to their shareholders. This decision is taken by the companies. मैं ये भी बता दूं आपको, ये जो और they have been good corporate citizens, अगर वो बढ़ा देते, कुछ सेक्टर में जो प्राइवेट सेक्टर के लोग थे, जब दाम कम हुए, OMCs ने अपने रिटेल बंक पे दाम कम किए, प्राइवेट सेक्टर ने नहीं किए, but then they also had a sense of introspection and they did it.
Okay, and let's take the discussion forward with our experts for today. We have Kunal as well as Lancelot joining in with us. Very good morning, gentlemen. Thank you so much, as always, for joining in with us. Kunal, I'm going to come to you. Let's talk about OMCs, right? We had seen a very sharp run-up coming for these companies and in terms of the stock move as well. Now, given that the current scenario that what we're seeing in terms of the LPG prices, the cuts that have been announced over the weekend of around 100 rupees, what is the sense that one should actually watch out for in terms of the pricing now for OMCs? What are the charts and technicals indicating?
Good morning, Vinny. Good morning, everyone. So, after a steep run-up for these OMC stocks where, we've seen IOC, BPCL, HPCL, I think these stocks have run up anywhere closer to 40%, 50% in the past, 6 to 12 months or so. I think there's bound to be these kind of news flows which could impact or, impede a stock price rally. But I would probably, sense that these are very minor, issues for the stock in terms of the near-term play. I think the uptrend which you've seen over the last 1 year is extremely strong. My sense is that once the price adjustments happens for these stocks, even if there's a minor correction of say 3 to 5% broadly for these names, I would believe that that could be a very good point to actually look at buying the stock or adding or accumulating further for these names, given the kind of run-up we've already seen for the OMC stocks in the last 1 to 1.5 odd year.
All right, so that's the view coming in from Kunal when it comes to the OMCs. Very good morning to you, Kunal. Also, good morning to you, Lancelot. Thank you so much for joining us on ET Now. And Lancelot, let's talk about the OMC counters. No doubt this LPG cut has come in, and also what various brokerages also pointing out that maybe in the full budget we may see some sort of a subsidy or so that the government may allocate or not. But that's maybe kind of a scenario. But what's your take coming in on these OMCs? Because all of them have actually rallied. They were among the last set of PSU counters actually to see that sharp rally take place. What's your take coming in on the fundamentals of all of these OMC counters? How are they placed? Because given the fact that most of them actually depend on what exactly is happening in the international crude market as well.
Yes, I think, they do depend a lot on their profitability, depends a lot on the international crude market. And we have seen the government, sort of offer a lower price on the LPG cylinder, which will have some impact, but not immediately. Maybe in the next year, we should see that impact play out. However, if you look at the oil marketing companies, they were very undervalued, a year ago. And as of now, I think given this 40% rise in, in the prices of the oil marketing companies, the valuations have just about, come back to the long-term trailing averages. So from a valuation perspective, I still think there is, some upside available, especially because many of these companies like BPCL and, Indian Oil have made further investments in both refining capacities as well as in gas handling capacities. And these will also start to generate, some kind of profitability going forward as well. So I would say, one can look at it from a fundamental perspective. I don't think they are overvalued at this point in time, but they seem to be reasonably valued. and any decline can be an opportunity to buy into these stocks, because the long-term outlook looks reasonably solid and growth is going to come back over a period of time. I think once the elections are over, then a lot of these issues which the market may be fearing will be out in the open, and then the discounting will come back into these counters as well.
Okay, that's the view coming in on OMCs. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break, we will start taking all your stock-related queries. So do send us your queries on the WhatsApp number that will be flashing on your screen.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And before we kickstart taking all of your stock-related queries, some of the important flashes coming on the bottom of your screen. One side you have the SEBI chairperson who's actually addressing currently, and some critical discussion points actually that she has brought up. One is that the SEBI is working on surveillance for IPOs and trading of the SMEs. Also, she's saying that disclosures are still being discussed about SME IPOs. There's malpractices in SME IPO, and trade state disclosure norms are under consideration. Some other basic comments coming in from her. One is that SEBI is reviewing if exchanges ensure key disclosures for SME IPO, and if I'm not sure if you can show, but BSE SME IPO index actually has seen a decline right after the SEBI chief's commentary coming in. So that one has seen a decline about 0.8% as of now. So yeah, important commentary coming in from the SEBI chairperson with regards to the SME IPO. And apart from that, there is a crucial case that is actually underway right now in the Supreme Court. And remember, it is crucial given the fact, the timing of the case and the pertinence of it when it comes to the Lok Sabha election. So you have the electoral bond case that is going on. Remember that SBI has asked for an extension in the deadline for them to submit the details that the Supreme Court had asked them to submit in the February 15 judgment. While Supreme Court, some of the comments coming in from the Supreme Court right now, they're asking SBI what steps they have taken for after the February 15 judgment on electoral bonds. They're also saying that SBI has not stated anything on the steps taken in the electoral bond case, while SBI has informed the Supreme Court that they can file an affidavit on steps taken in the electoral bond case. So some developments coming in. We will actually touch base on that as and when we get Vinny. So yes, crucial developments, crucial two different aspect, one on the political end, the other one definitely very pertinent for the markets.
Absolutely, keeping an eye out on that, and surely watching out for that. As of now, seems like the Nifty is trading at the day's lowest point. But on that note, let's get started with all the stock-related queries. And viewers, if you are joining us for the first time, you can send us on your queries on the WhatsApp number that is flashing on the screens as well. You do mention your name, the stock price at what you've purchased it as well, and whether it's a long-term, short-term query as well. So let's get started, and we are experts for today. Kunal as well as Lansot both are joining in with us as well, and they're here with us. Let me start with the first query, and Kunal, this one is coming your way. We have Mr. Venkat Rao from Visakhapatnam, who wants to know in terms of Poonawalla Fincorp as well as Zomato, if it is a good time to enter both these stocks at the current level?
So Poonawalla Fincorp, yes, you can look to enter the stock at current levels. I think the stock had corrected from 500-ish levels to 430, 435 just about till last week. It's seen a bounce today by a magnitude of 4-5%, but I believe that this 430 mark could be a very good trigger support for the stock over the near term. So that could be a good point where you may look to buy or add more for Poonawalla Fincorp. Zomato, on the other hand, I think the stock is going through a corrective wave so far. From 175, it's corrected towards 153 levels as of now. My sense is that the stock may see maybe a slight increase in terms of the downward correction, could come back towards 135 levels. So I would suggest that somewhere closer to 135, so maybe 137, 138 could be a better price to try and buy Zomato.
All right, this one is coming in from actually a lot of queries right now coming in for a short-term period. But let me take a long-term investor who's written to us, and Bharti Dave, who is a senior citizen, has written to us, Lancelot, and she has 6,000 shares of Udaipur Cement at an average price of 32 rupees per share in a portfolio. She wants to accumulate some more shares. She wants at least 10,000 shares of this particular counter in a portfolio. Do you think it's advisable to bet big on Udaipur Cement? Is this a good company fundamentally for the long term, or should she look at other mid-cap cement companies?
While I don't have a direct view on Udaipur Cement because it's not a company that I track, but I do track the cement sector. And being a commodity company it's always better to be with the larger companies because their cost of manufacture of cement per ton is the lowest. So even in a downturn in the industry, those companies will continue to remain profitable, and hence one should try to diversify or at least make your investments when you're looking at sectorial in themes in companies that are larger and have a major market share. So a company in point could be like Ultratech Cement. That could be a better advantage, which is one of the lowest cost manufacturers of cement, has plants which are all over, north, west, as well as now in South India as well. So companies like that are more keen to. They can look at a downturn, and during a downturn of the cycle, they would still outperform. Whereas maybe Udaipur Cement is doing well right now because the cycle is good, but there could be an adverse scenario when the downturn begins, and then you'll start seeing very low levels of profitability, and that could impact the valuation significantly.
Kunal, the next query is on two stocks. One is Traxon and OnMobile. Now, the viewer Devra has bought Traxon at a price of 106 rupees and OnMobile at a price of 110 rupees. This was for trading purpose. They're making a loss on both these. So now what should they do? Continue to hold or maybe sell it? The time period is only 2-3 months that they want to hold now.
So I think first lessons of trading is that whatever you invest, look out for quality whenever you're looking to invest or trade, even if it's a short-term trade, because there are times when many of these low high beta and smaller cap stocks, they would look very attractive, but then trading into these stocks have to be a lot more disciplined. And the second and the most important part is you have to have a price stop loss for these names, even if it's a short-term bet, and since you are very clear that these are short-term trading bets. My suggestion now is that you have to look to exit these stocks at every minor bounces which these stocks may offer, both OnMobile as well as Traxon, because both these charts have confirmed breakdown for themselves. I think OnMobile has now come back towards a major swing low, multi-month low for itself at levels of 71, 72 where it's trading right now. So both these charts are weak on their respective time scales. I would suggest an exit.
All right, let me take this next query that I have is coming in from a big fan of yours, Kunal. This one is from Anu. She has about 400 shares of Engineers India, which she's purchased at the levels of around 233 rupees per share. She wants to know what's the strategy she should adopt for the short to medium term when it comes to Engineers India.
See, there are bound to be, many of the, rather a phase where many of these PSU stocks, they would get into a time-wise and a price-wise correction. What we've seen for Engineers India is a fabulous run from 2023 lows when the stock was, I think, at 70 rupees or 75 rupees towards the point when the stock had crossed 260 plus mark. So in the last, 1 year approximately, the stock has run up more than 3x, 3.5 or x. Now, there's bound to be a point where the stock may correct, consolidate, spend at least 3 to 6 months, in terms of consolidation. So if you're a very short-term trader, then I think you should wait for a phase where the stock corrects, say comes back to sub 200 levels. That could be a very good point where you may look to average. From a longer-term play also, I think 200 levels could be a very attractive point where you may look to add or accumulate further.
Lancelot, Madhusudan has a query on alkali amines. They are holding it at a price of 3,880 rupees per share. They have 100 shares. What should they do now? What should their strategy be? Should they continue to hold, average? What's the view on this?
Well, I think they should continue to hold. Yes, there was a period of, a little bit of exuberance on the chemical company side, and almost all the companies in the sector, the prices and the valuations went up. But if you take a little longer term horizon, let's say over the next 2 to 3 years, these companies, including alkyl amines, will benefit significantly from the move from China plus one. And even these molecules that they're working on, they take about 6 to 8 months before they can come on stream, because a chemical plant requires time for these molecules to come on stream. So I would suggest that during this period, there is a lull in the market prices, and we've seen a slowdown in the market for various specialty chemicals. But this is part and parcel of a cycle, and one will see that as the capacities come on stream, you'll get profits going forward and an increase in earnings over the next 2 to 3 years. So you can average on the way down and buy at lower valuations so that your longer term outlook is strong.
Take this next query that is coming in from our viewer Janvi, who's writing to us from Bangalore. Kunal, she has about 20 shares of MTAR Tech at the levels of around 2,100 rupees per share. She's down by about 15% ever since she's purchased this particular counter. She wants to know, is it okay to hold on to this one for the next 1 year, or what sort of strategy she should adopt given the fact that she is suffering loss? 2,100 was the buy price.
Yeah, I think from 2,800 or 900 is where the stock had seen a consistent or a continuous kind of a correction. It's come back towards 1770, 1780 mark. I think the lowest the stock had hit was around 1680 levels last month or a couple of months prior. So I believe that it's gone through a 6 or a 7 months of consecutive correction. The indicators are nearing into an oversold territory. So what these stocks would probably do is that before forming a major bottom for themselves, these stocks would spend a lot of time at lower levels. So I think if you're a long-term investor and if you have a time horizon of 1 year plus for MTAR Tech, then it makes sense to hold on to the stock and wait out for a phase where the stock tries to get into a oversold territory in terms of indicators. That could be a point for you to average out further, bring your cost price lower so that on the way up, whenever the stock gets into a process of a rally or a bounce, you may get an exit at a better price for the stock.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back and we'll be taking more of your stock-related queries after the break. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries. And Lancer, this one is from Anand from Bangalore, and they want to know on Suzlon. They have 1,000 shares at an average price of 41 rupees per share for a time period of 1 to 2 years. What should they be doing with Suzlon Energy? Should they continue to hold this or maybe book out?
Well, I think valuations have been, are expensive given the reason the stock ran up was obviously the focus of news on the renewable energy space and some of the events that have taken place that are positive for the sector. But if you look at the time required for Suzlon to really generate significant cash flows to justify a higher valuation, it would take maybe another 1 to 2 years before it can justify, it can raise cash flows to justify even the current valuation. So from here, I see that either one has to see some significant change in terms of the profitability for being able to justify a higher valuation. So one should either, if you're a really long-term investor, then hold on to it, or one can look at exiting on a bounce.
Right. This next one is coming from Yuvraj, writing to us from Chennai. Has about 100 shares of Home First Finance. For the longest time, he's written for a long time, but he is in 10% loss right now in this particular holding of his. Can he add some more at this point in time? Is it advisable to do that, Kunal? What's your take? Do you think that given the fact that he's been holding this counter for a long term, but he has been actually suffering 10% loss, now is the right time to go ahead and average it out?
Not really. The indicators are not closer to oversold for Home First. The stock has corrected from 1,050 levels to now 850. But even this correction which the stock has seen in the last 4-5 months or so, October, November, was the period where the stock had made a top. I think from there the indicators are not oversold. The fall has been a bit gradual for the stock, and I think that's one of the major reasons why the indicators are not quickly into an oversold territory. Maybe the stock would probably get into a further leg of correction. So I would probably suggest a wait on the stock and on the way down, in case if the correction accentuates and the indicators oversold, say sub the 800 mark, say 750, 800 range, that could be a better point for you to buy or average further.
Lancer, Pradeep from Kolkata has a query on a couple of stocks. One is Havells, which they've bought at 1,199 rupees. The other one is RPG Life, which they bought at 790 rupees. What's the long-term view on both these stocks? Should they continue to hold or maybe book out of profits?
Yeah, I think Havells is actually doing well, and the long-term outlook is also good. So if you look at the business model of Havells, it is focusing on premiumization and improving the products that they sell. It started with the fans business and then entered into the entire space of, kitchen appliances and home appliances. So given their good marketing track record, and we are seeing the profitability of the company also improve over the last couple of quarters, I think one should look at continue to hold and maybe even accumulate in case there's a decline, because this space is going to see structurally a good phase of 20 to 25% revenue growth over the next 3 to 4 years. And Havells, being one of the major players, will be able to dominate that space. So one should stay invested as far as Havells is concerned. As far as RPG Life Science is concerned, I think a lot of investment that they've made hasn't really played out in terms of returns, and the return on equity, etc. still needs some improvement to be able to justify the kind of valuations that it's enjoying at this point in time. So one, if you have a holding, you can wait for a while. Otherwise, one can even look at exiting and moving to a different space.
This is a combo view kind of a query coming in from Sunny. He wants to know about Bharat Forge as an investment. He wants a technical and a fundamental analysis on that. He's already holding some shares at a price of 525 rupees per share. Fundamentally, a good stock to stay invested in for the longer term. And Kunal, which are the crucial price points that Sunny should watch out for, given the fact that he's making handsome profits in his holding in this particular counter? Kunal, go first.
So I'm sure, I think Bharat Forge has been an exceptional mover over the last 5 years, 10 years or so. I think it's been a consistent kind of a chart pattern for itself. And I think that's one of the major reasons why on the long-term basis the charts look attractive. But the only concern is the short-term time frame and the sell-off which had happened for Bharat Forge in the first couple of weeks of the month of February, where the stock had fallen from 1330 to almost 1100 in a matter of couple of days. That is acting as a bit of a resistance trend for the stock over the near term. So my sense is that the stock should ideally go into a retest of the previous lows of 1100 mark and go slightly below those levels. So from a short term play, I would believe sub 1100 mark would be a better level where you will look to average further in case if you're looking to average.
All right, that's the take coming in on the technical front when it comes to Bharat Forge. Lancelot, what's your take coming in on Bharat Forge? A good investment to stay put with for the longer term, given the fact that the price point was pretty attractive that Sunny actually entered this stock. And we've seen a lot of these auto-anch players also do well. And Bharat Forge, given the fact that they've diversified even to the defense side of the business as well, that's also auguring well for them, isn't it?
Yes, absolutely. I think Bharat Forge will continue to grow because you have seen significant growth in the auto ancillary space. And you must remember, Bharat Forge is also a global play. They have plants, all over the world. They operate in almost 12 different countries and are able to supply automobile components from areas where the cost of production is far lower than even the Indian continent. So their entry into the defense space has also seen some success with them getting orders from the Indian Army, as well as being able to export some of the arms that they manufacture. And that should also continue to see good traction going forward. So I think one can use the fall to accumulate some more of the stock. But since you've invested at a very low price, one should continue to hold as well.
Kunal, this next query is from Lakshmi from Bangalore. It's on Manappuram Finance. They're holding 200 shares at a price of 196 rupees per share. Wants to know, should they continue to hold this or maybe look to average?
I think you can look to hold on to the stock as of now. For averaging, I would believe the stock is very a sudden beta or a high beta stock when it gets into a zone of a breakout. So it's always best to try and capture the stock or look to buy the stock on decent amount of corrections or a certain phase of that correction. I believe in case over the next say 3 to 4 weeks, if the stock provides a good 5% to 10% swing on the downside, that could be a good price point for you look to add further. So keep close to 155 as a benchmark support for Manappuram. In case if the stock dips down to that level in the next 3 to 4 weeks, good price to add.
All right, just taking a quick detour, marking the flash on the bottom of your screen. Like I mentioned, you have the SEBI chairperson actually addressing and some crucial commentary coming in that she's saying that we believe that there are sections of froth in the market not appropriate to allow this to keep building. Apart from that, she's saying that the SEBI has suggested the mutual trustees to look at whether lump sum investments into small and mid-cap funds are appropriate. Apart from that, she's saying that there are pockets of irrational exuberance in the market. So that's the commentary coming in from the SEBI chairperson, and we are getting you those commentary as and when they are coming in. So crucial commentary coming in from SEBI chairperson. In fact, in a short while from now, let's hear out to what exactly she has to say. Remember that apart from these commentary, what she's also mentioned is the fact that directive to mutual funds to disclose stress test results of mid and small cap funds starting from March 15. Let's hear out exactly what she had to say.
Some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for SEBI to underline that in terms of disclosures to the investors. The second is in terms of actual price manipulation, both at the IPO level and at the trading level. We are working to evidence that we do see the signs. As I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns. I would say it's still on the kitchen table. It's not yet gone into the oven. You know that when we issue a public consultation paper is when it enters the oven. But right now it's still on the kitchen table. We're still working with advisors to try and understand the dimensions, the data, analyze the data. So still at a relatively early stage.